Hello everyone, Dan Chodan here with Trout CPA. Wanted to provide a really brief update today to the Paycheck Protection Program as Congress has just passed the new bill. The Paycheck Protection Flexibility Act was first passed by the House. Senate passed it just late last night, and with the almost unanimous support it received, President Trump should be signing this bill into law very soon. So some very positive changes here. As the name of the act implies, it is all about really extending some deadlines and providing flexibility and more opportunities to be able to get forgiveness for the paycheck protection loans that you may have. So let's just quickly review some of these key changes. And you may have heard some rumblings about this already. This bill is the same as what the House passed. And the big change was extending this 8-week period that we've all had to a 24-week period. Now, a big piece of this is that this is just flexibility. There's ability to still stay within that 8-week covered period that the original law had. So if you're a business that had planned and had already spent this funds within that 8-week period already, there's no need to go to that 24 weeks. But of course, I know there's many businesses that just haven't been able to operate at all and really need to be able to have this extension. So that flexibility has been huge. Another key rule that changed was just the amount of payroll and non-payroll costs that can be used. The SBA had added to the original law by saying that it needed to be spent 75%, 25% when we're looking at forgiveness. No more than 25% could be on non-payroll costs. So that was changed a little bit here in this bill by saying that we could take 60% as the minimum amount towards payroll. So up to 40% could be used on non-payroll costs. A tricky part of this, though, is that 60% of your total loan amount now has to be spent on payroll within the covered period, or else you could get no forgiveness, faced with what has been called a forgiveness cliff. I don't know that this is going to be too much of an issue. There's been a lot of talk about it, but if you're not able to spend 60% of your loan on payroll in a 24-week period, then we probably just have bigger issues going on. So I think maybe that would have been an issue if it was still 8 weeks, but with 24 weeks, I hope it's not. Another extension in this bill was the June 30th restoration date. This was kind of a safe harbor. If you couldn't keep your full-time equivalents in the 8 weeks, well, as long as you restored it by June 30th, we would be okay. That date's been extended to December 31st. Gives a little bit of angst because I know many businesses were planning on that June 30th date to be able to restore people by and then move on. So I'm hopeful that what this will mean practically is that as long as we still make that restoration at some point before December 31st, we'll be okay. We'll be interested to see how the new forgiveness application addresses this, because what I don't want is for everyone to have to wait until after the year end to be able to see what their full-time equivalents were and apply for forgiveness. So I practically don't think that's going to happen, but a little bit of worry on that front. We'll stay tuned to what the Treasury and SBA say in the next forgiveness application. Another key change was that if you do end up with an unforgiven portion of a loan, that repayment term on that loan is extended to 5 years. So hopefully this doesn't happen often, but if it does, in your case, those terms are now more favorable. Another piece that changed here in this bill was the expansion of the payroll tax deferrals. Under the CARES Act, we were able to defer some of these taxes and pay them in two payments later on at the end of upcoming years. However, if you got a PPP loan, your applicability to use this was pretty limited because it would only be through the date that your loan was forgiven. And now it's even playing field. Having a PPP loan doesn't affect your payroll tax deferment and delay. You can use that just like any other business. Getting a little more into the weeds of this bill, but some things here that may help clients out as well. Full-time equivalent reduction exemptions. There have been a few of these out already, and now this bill just expanded what had been already provided in guidance to date. So now, if you were unable to rehire individuals that were employed on February 15th, or unable to hire similarly qualified employees for those unfilled positions, this is going to be a new certification, new exemption that you can still get your forgiven amount even if we didn't bring back all these full-time equivalents. So a couple of new reasons there. Will be interesting to see how that's defined and how we'll need to document that. That'll still be to come. The last one here is the broadest and may also be the most useful one for many business, depending on how they actually apply it. But it seems to be a big catch-all. If you're unable to return to the same level of business activity at February 15th due to some guidance from some governmental agencies that are listed here, by the end of the year, whether that's for a lot of different reasons here with sanitation, social distancing, workers, or customer safety, it definitely feels like a catch-all exemption, and I hope that's what it becomes and is pretty broadly accepted. And given everybody a lot of flexibility, we'll see how that ends up on the final application. But it would seem to me that if you have a business, maybe like a restaurant, that just is not allowed to be at full capacity through the entire year, this would be a very easy way for you to say, well, I can't hire my full staff when I can't open my full restaurant. And I think there's going to be a lot of examples of people using this, and I hope it is a very broad application. Of course, there's still questions that are outstanding, as there always are. And the biggest ones are just going to be, well, what does this all mean to my forgiveness application? When can I make that application? When will each bank be ready to accept that application? And when will even the new application be ready? And on these first three questions, I'd like to be pretty optimistic, since they did put out an application already, and these rules are really more tweaks than full changes to the program. I think they should be able to update that and have that out pretty quickly. Each bank, I'm sure, though, is just going to have to absorb this information at a different rate. But I'd be optimistic in the next 30 to 60 days, we'd still be able to at least start many of these forgiveness application processes for everyone, especially for everyone that was planning to spend that money in the original 8-week period anyway. But I think some banks are going to be slower than others, just as it was on the front end. And that'll depend on when the SBA gets their information out and how quickly a bank can absorb that. Perhaps if they have an online portal they're using for this process and not just accepting the SBA form itself, but they're putting it into their own format. I could see delays there, of course. So really an open-ended question here on when we can start doing this. But at least for the most part, we have so much more flexibility today that when we apply isn't the biggest concern. We got bigger fish to fry than to worry about when we can get this application in, and we have a lot more flexibility, so a lot less pressure is what it feels like at this point. So another question here will just be, are we going to see more regulation? Are we going to see more congressional action and legislation? Well, hard to say. A lot of talk in Congress. Who knows what's going to happen there, but certainly Treasury and SBA are going to have to put out more regulations, more rules about how to implement this new bill, on top of the fact that they were planning and expected to issue more regulations on the rules as they were. So we're definitely going to see more. There's going to be more out there. But I have a feeling we're kind of 80 to 90% of the way there. And hopefully that remaining amount of regulation that's needed is just going to be for those specific and narrow examples. And the last question I threw in here is an interesting one. We had a cap on compensation of just over $15,000 previously, and is that going to be raised? And that was based on an 8-week period, so it would make sense that that's going to be raised if the weeks are going to be able to be increased from 8 to 24 weeks. But we'll be very interested to see how they implement that, or if it's going to be allowed if you elect to stay with 8 weeks instead of a 24-week period. So definitely still some nuances to see what happens there. The biggest reason that this will help a lot of people will be for the self-employed individuals who had a maximum loan of almost $21,000, but were mathematically then limited to this $15,000 amount, so they could never achieve full forgiveness under the old rules. So I think that's going to mean good things for those self-employed individuals, but how they implement it, how this gets applied, there's still a lot of questions out there in that regard. But again, I think hopefully if we're to a point now with these rules that we have been able to spend all of our money then we were already in good shape. Now these rules give us additional flexibility. I don't think any business will have to worry about can they spend their funds. It probably shifts more to a conversation of, well, we just need to make sure we don't get hit with any of these full-time equivalent reductions. That's, I think, probably the key takeaway in conversations is going to be around the full-time equivalents and the final rules that are issued on that. Well, thanks for taking a few minutes for this quick update. Our team here at Trout is going to continue to update our tools and update our website resources and continue to be responsive answering your questions as you have these issues and move towards getting these applications filed and submitted. Again, thank you for taking the time.